Welcome back to Season 2 of Finance Bros, navigating REITs and riches in Singapore. In today's episode, we'll explore real estate as an investment, focusing on the Singaporean property market and its role in wealth building. So let's dive in.
Let's go.
So the first segment we want to talk about is the overview of the Singaporean property market. To begin, let's take a closer look at the Singaporean property market and its key characteristics. So the first thing we want to talk about is this thing called market trend. And I think the good report that what Stat Homes have put up, which we'll share the link eventually, is that they actually have the recent trends in property prices, rental yields, and transaction volumes in Singapore all captured. And analyzing some of these key variables, right, to show you really what is really the trend looking like right now, and also maybe a bit of the insights going to 2024 this year. Yeah. So the first thing that we have seen in their report is that there's a decrease in transaction volume. So basically what it means to us is that if the transaction volumes have gone down in general and across most areas and types of housing, it could indicate a slowdown in the real estate market. This could be due to various factors such as economic uncertainty, government regulations, or changes in buyer sentiments. And then the second thing is decrease in housing rental contracts. So a decrease in the housing rental contracts across the board suggests a decrease in the rental demand. This could also be due to factors such as decrease in population growth, changes in rental regulations, or an increase in available rental properties. And the last one is actually, amidst of all this, right, there was actually an increase in rental rates that was discussed
That's
in
interesting.
Stackholm. Despite the decrease in rental contracts, an increase in their rental rates indicates that the rental market remains competitive. This could be due to a mismatch between supply and demand, with fewer rental properties available despite a decrease in demand. So overall, this trend suggests a complex situation in the Singapore real estate market. While transaction volumes are down and rental contracts have decreased, increasing rental rates indicate that the market is still dynamic. This could present both challenges and opportunities for investors and property owners, highlighting the importance of careful analysis and strategic decision making.
Yes, that's right. So I think what we want to understand first, of course, is about the government regulation and policies. So I want to touch more on that, on the regulatory environment. So in Singapore, we have, of course, the buyer stamp duty. Okay, so as you can see on the diagram below, this shows how our buyer stamp duty works. Okay, previously, I think just 1 or 2 years back, the buyer stamp duty is not priced like that. It's not in this range. So as you can see on the graph, it shows first 180,000, there's 1%. Okay, second 180,000, there's 2%. And the next 640,000 on 3%. Okay, now I think recent change, what it happens is that more than $1 million and above, the next 500,000, there's another 4%, and the next 1.5 million, there's 5%, and in excess of 3 million, there's 6%. So this makes a little bit more cost in purchasing your property if the property is very, very high, right? So this is one of the regulatory or cooling measures that's implemented by the government. The second cooling measures that's implemented by the government is this thing called the ABSD, Additional Buyer Stamp Duty. Okay, so, as all Asian, right, everybody wants to own as many property as possible. It used to be a Wild West society. Everybody can own so many different properties, right? You just go to a showroom, you just put your option, and then the next day you can just sell away the option, and then you just flip and flip and flip. But this is not good to continue forever like that, because property price will be more expensive, and it's very difficult for young people to buy their own first set of property. So this ABSD, if you want to own more than one property, okay, for the second property for a Singaporean citizen, that's 20%. Okay, so meaning a 1 million property, if you want to buy this 1 million property, you have to pay 20% first for this additional buyer stamp duty. That's $200,000. So that's a cost. Okay, and then for the third property or subsequent, that will be 30% more. Okay, so for PR, that will be 5% on the first property. Okay, second property will be 30%, and the third will be 35%. So for foreigners, okay, any property, whether it's first, second, third, doesn't matter, it's a 60% of ABSD, which means $1 million price again, that's 600,000 just on additional buyer stamp duty. So this really stops like foreigners to really purchase any properties in Singapore.
Yeah, which is a good thing because a lot of people were speculating back then whether all the cooling measures will go away quite clearly right now, and it's very apparent that it's not going away. In fact, if anything, they're just increasing the bar, lah, which is a good thing, because so that hopefully with this, Singaporeans are not going to be priced out of the market, really.
That's right. I think with all these cooling measures, we also want to provide some insight on this market outlook on the property market. Okay, of course, we are not property agents. We will just touch on some of these things. Okay, some insights that you guys can be aware of. All right. Singapore property market is very special. Okay, our land is scarce. Okay. So the first thing that will affect the market outlook or the prices definitely will be the economic growth. Okay, as the country gets more and more rich, okay, people pay increase more and more. They want to increase their lifestyle, upgrade their lifestyle. So if there's strong economic growth, it will lead to increased demand for housing. While of course, economic downturns happen, people will tend to scared that they can't even have a job. Then they will probably decrease that demand of property. Okay, supply and demand dynamics is also very special in Singapore. In Singapore, we have this thing called the BTO. Okay, it's our flats, right? So government can actually increase and decrease the demand, the supply of the flats. Okay, and these will affect the supply and demand dynamics. So if there's an oversupply of housing, okay, it will lead to a lower property price and rental rates, while of course under supply can also lead to a price increase. And this can be clearly shown during COVID-19, that circuit breaker period. Foreigners can't really go back anymore. There's only this set of available rental flats out there, right? So when there are more demand, definitely the people can ask for a better price on the rental part, right? And thirdly, of course, is government policy. Okay, government policy such as cooling measures like the buyer stamp duty and additional buyer stamp duty that we have discussed before, it can impact the property market. Just to say a very simple example, for the additional buyer stamp duty for foreigners, that's 60%. It used to be lower than that. Okay, and foreigners come to Singapore, they usually, if they are rich enough, they work in Singapore, they usually will want to buy somewhere near to their workplace, CBD area, right? And CBD area, the prices has been always very expensive, right?
Yep.
But because of this 60% additional buyer stamp duty happens, the prices in the CBD area has been stagnant for some time. Yeah, so that's government policies that changes. If it change, the prices and everything will be affected as well. Interest rate as well. When we buy houses, we will have our mortgage, and our mortgage is tagged to interest rate. So interest rate can also impact the affordability of housing. So a lower interest rate can stimulate demand for housing, while the high interest rate can dampen the demand. Last but not least, of course, there's also global and regional factors. So external factors such as geopolitical events, global economic conditions, and regional market trends can also influence Singaporeans' property market. Singapore is so small, right? We are affected by all the things around us. Even for people who's coming to Singapore to work, it's also get affected. So global and regional factors is always one of the factors that will affect the property market.
Yeah. So, one other thing about the global and regional factors was quite evident during the pandemic period, when Singapore has handled the pandemic pretty well, and it's quite well known to the rest of the world, and especially in Southeast Asia. So you can see a lot of influx of people thinking that Singapore will make a perfect place to be their second home, and some even the extent of putting their family office here, because of the tax savings, because of the political stability and the economic stability of Singapore.
Right.
Yeah. So these definitely affect the prices. And based on these factors, the future outlook for the Singapore property market is actually influenced by all these considerations. And so the segment 2 we want to talk about is the benefits of real estate investment. So real estate investment offers several benefits that make it very attractive to investors, and we're going to explore some of these benefits. And the first, obviously, is this thing called capital appreciation. So property prices in Singapore have historically appreciated over the time, leading to a potential capital gain for investors. Not to say just because you buy any property, it will most likely make money, but by and large, because of the land scarcity, if time horizon is not a key issue, I think if you do a due diligence, there are many opportunities that Singaporeans can really leverage on. Yeah, especially on this thing called loans. A healthy debt in Singapore would be a property loan, since the interest rate are not very high. Of course, in the last 2 years, it was a bit abnormal. Before the pre-pandemic period, actually things are pretty okay. Yeah. So the next thing is obviously rental income. We want to highlight the potential for rental income for investment property, providing a steady stream of passive income. This is a good hedge against inflation. Even property for capital appreciation or even for rental, if you take note of that, actually in the last couple of years when the stock market is not doing exactly the most
Right.
well or stable, property prices didn't really come down.
Right.
And you can see rentals are still climbing. Yeah, this goes to show that property market is actually a good non-correlated
Right.
asset class that you can have apart from your stocks that you own. Yeah.
That's right. Yeah. So once we talk about the benefits, of course, every investment comes with risks, right? So what are the risks and challenges in real estate investment? So real estate investment can be also can be lucrative, okay, but it also comes with a set of challenges, okay. So the first and foremost, what we want to talk about is market volatility, okay. We will see how the economic changes or how economic conditions and market will lead to the volatility in property prices. The second is, of course, liquidity risk. In terms of asset class, property is not the most liquid. Recently, I just sold my flat. It takes about 3 to 4 months before it was finalized and before I take the money. So if you are really in need of the money, you'll probably have to wait about 3 to 4 months lah. So it's not as liquid as other asset class. And of course, as long as there's any regulatory changes to the market, things will start to change again. Right now there's buyer stamp duty, additional buyer stamp duty. We also not sure what is the next thing that will change to the market.
So, along with all this, right? Actually, if you pay attention, property prices during 2015 to 2020, you don't see a very big capital appreciation until the black swan event happens,
Right.
which is our pandemic. It drives prices up quite tremendously, and that's where you can see all these collective different consideration does really affect the property prices here in Singapore. Yeah. So therefore, we also want to really look into the strategies for successful real estate investments that we can actually leverage on. So to succeed in the real estate investment, it is important to adopt, of course, effective strategies. And these are some key strategies to consider. I guess location selection is one of the very standard things that most people will tell you, especially the property guys. And I think choosing properties in prime location with strong rental demands and potential for capital appreciation is needless to mention. The next thing is diversification. You should not just think about properties that are purchased for just capital appreciation. Renters are obviously one of them. You could also consider going into commercial property,
Yep.
especially when there's no duties in place. So these are just different ways where you can diversify. But the last thing we want to really spend a bit more time to talk about is this thing called financial planning.
Yep.
It's quite important in really getting your property to make money in the first place by looking at really where is your financial health, affordability, time horizon, your risk threshold and stuff like that. This is very, very under discussed in the market, because when most people look at buying a property, if you sit down with the property people, they will only ask you what you want to buy, what's the budget.
The very beautiful picture.
Yeah. And it's only normal for them to ask you things like that because you clearly want to buy a property, right? They have to understand what's your own needs. But saying that, I think to really measure one's financial health, especially looking at things like your financial ratio, are you holding enough assets? Would you be overly indebted? Are you looking at having enough retirement sums allocated? If you buy a house using an OA account to fund for your house, would it affect your retirement sum into the future? Some of these things are often, not, like I say, not really discussed. And I think it's very prudent for investors to get into these things before they even think about whether they should put their money into the property market or not.
Right.
Yeah.
And I think the holding time, I think people's expectation of a house is that once I buy today, maybe 3 years later, I can sell it away straight away. But it's not so fast in that sense. So probably you guys have to look into your financial status, whether if let's say 3 years I can't sell away the house, can I just hold it on to 5 years maybe? Can I still service my mortgage? Can I still lead my normal life? I don't need, every day I eat bread and butter, just to survive. All that.
So in other words, you should not be thinking about buying a property and assuming that at sub-sale, once it's still you can sell it. You should practice a lot more prudence than that.
Right.
And of course,
Right.
you also have to factor in one other things that people don't really want to talk about, which is interest rate. And it's
right.
very evident in the last couple of years where you see interest rates fall.
Right. Because in reality, if you think about subsale, Jimmy, you think about subsale. Simon also think about subsale. And everybody else will think about subsale. So everybody will have this subsale thing. So who is going to be the advantage? Nobody.
Yeah.
Right? Everybody, if I'm a buyer, I'll just go in slowly and consider every unit before I really price I have my decent price. And it'll be probably lower than what you expected.
Yeah. So imagine if you have like, you buy a project and the project has like maybe 2,000 units out.
That's right.
If you're probably thinking about subsale, I guess many people will also be thinking about subsale.
Exactly.
And then this comes where demand and supply is in play.
Right.
Because now I have
So much
supply of people who wants to sell the house or also who wants to rent a house. Then would I be able to sell it at the price I'm expecting? And also would I be able to obtain the rental yield I have intended for? Yeah.
So the person who can hold for longer term, if let's say their financial emergency funds is good enough, they can sustain a while more, then of course definitely the person will win.
Yep.
Yeah, if you really just to make money just because of 3 years later and just want to sell away, then definitely you just need to squeeze a little bit. And maybe you make a loss because of all the stamp duties and this and that, right? Yeah.
Yeah. So as we conclude, real estate can be a valuable component of a diversified investment portfolio where it offers potential for capital appreciation, rental income, and inflation hedging. We also want to tell you that you should always do a due diligence. Find an experienced, capable financial advisor to sit you down before you think about buying a property, whether is it for your stay and whether is it for investment or rental purposes. I think it's important to really do a due diligence before you go on to showrooms and think about placing that check. Yeah. So join us for the next time as we continue our exploration of wealth building strategies. Until then, keep striving for your financial goals. This is Jimmy and Simon signing off.